Oh man, is Bitcoin recovering, or is this the start of the end of this cycle? Bitcoin trying to show some strength here, but the reality is we could be facing more bother ahead. In this video, I'm going to break down exactly what I'm seeing in the charts. We're going to do some technical analysis. I'm going to share with you why I think this market is just on a knife edge right now, and hopefully you find that useful. If you do, smash up the likes. Do not forget to subscribe first and foremost. Let's take a look at this move, right? We have bounced about 10% here on Bitcoin. It's been a decent move here over the last kind of 5-6 days, recovering from the lows. I mean, the worst candle was on the 11th of March, 6 days ago. We went as low as 76.5. Since then, we've managed to recover. We're now sitting just shy of 84,000. And the question now is going to be, will we get back to where we were, right? Will we get back to the euphoria of the knocking on the door of 110,000, going up beyond that to 115, 120,000, and altcoins move behind it because we didn't even get our altcoin season? Well, there's going to be a few more challenges, not as straightforward as us just rocketing to the sky. Now, before we do the technical analysis, it's important to understand what is the macro piece that's going on here, and there's a few, right? The first one which comes into focus this week is, of course, our FOMC meeting. The market has priced in 100% of the market, 100% certainty from this market that we are not getting a rate cut on March the 19th. That's in 2 days' time on Wednesday. Jerome Powell, the Fed, they're getting together for another FOMC meeting. The market expects a pause. Okay, they don't think we're going to get a rate cut. So with that in line, that's what's not giving us the wind behind ourselves, right? It's not giving us excitement. Remember, crypto, risk on assets, need the Fed to be printing. They need interest rates to come down. They need a loosening of monetary policy for us to see risk on movement. That's one thing that's weighing on us. Of course, thereafter, we've got the big correction in the traditional markets based on Donald Trump's tariff policy. You've heard all about it. You know what Trump's doing. The tariff uncertainty, the fear of stagflation, the fear of this recession coming up is weighing on markets. The global markets have pulled back into correction territory and they're trying to find some footing. Crypto is just playing a mirror image of that. So for anybody sitting here and trying to come up with a fundamental reason of, oh, crypto is done now because the halving cycle's done, or this, or on-chain metrics, it's got nothing to do with all that. You can just disregard all of that. The fact of the matter is we've gone from 109,000 on Bitcoin down to 76.5, recovered to 83, 84 range based on the traditional markets, based on Trump and the tariff policy, and based on the fact that not yet have we seen a rate cut. Those are the factors to play. Okay, and if you understand that, then you're going to understand where we're going. So yes, we can do TA, which we're going to do right now, but understand that this is moving quick. Trump can tweet, Trump can talk about the tariff. There can be, progress to do with Canada or Mexico and the US. There could be different macroeconomic data coming out, which we're monitoring every single day. And that is what's going to move your market right now. Okay, this is not to do with on-chain or anything specific to do with Bitcoin or your favorite altcoin. It's not. It's just a wider market pullback, and that's what we're experiencing. Hold up. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. The military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. Ijaz.uk/NordVPN. And let's get back into this video. So when we look at the TA, there's an interesting pattern you can see going on, right? We lost our daily EMA ribbon. We went to go test it, rejected, went again, rejected. Now it looks like we're going on another attempt, right? But so far, 1, 2, 3 in a row, we've been rejected. So the buyers goes to the bear. This trend on the daily chart belongs to the bears. And the bears are on a mission to send this price action, like I've been saying since 109. There's videos of me at this point here saying, guys, I don't feel comfortable. You go watch it, right? Or I'll clip it up if I get some time. I don't feel comfortable. This price action just skyrocketed. And I said, guys, we haven't even tested the previous all-time high, which we broke through this yellow line. When we broke it here, we never came back to retest. So throughout that period, I said, guys, it's healthier for us to turn around, create some support that would give us a perfect buying opportunity, and then things will look brighter when we bounce from here. And I continue to maintain that, right? This kind of region here, this block is a nice area to come and buy the dip in, right? It's testing the previous all-time high, and it creates good structure in the chart, turning that resistance into support and using it as a springboard to go remount and attack towards 110, but also beyond to create higher prices on Bitcoin. So that being said, the bears in control of the daily trend. They want to send us down to 72 to 74K. They're not going to want to give up. And if I show you the liquidation chart, which I'm going to shortly, you got to remember these figures. These tie in perfectly with the liquidation levels. Now, equally, whilst the bears are shorting, the natural thing with the market is there's two sides of every trade, right? You've got the buyers and you've got the sellers. You've got the longs and you've got the short. So as more and more people pile into longs here, they're piling into longs because it's such an obvious trade, right? You've got the strength of the EMA ribbon. The bears own the trend. They've had two successful legs here and they want another leg down here. The opposite trade is to say, hey, we want to wreck them to the upside, right? We want to recover here, take their liquidity and move the price back towards 100,000 and then eventually 110,000 as well. So those are the two dynamics in play. At the moment, the slight bias, if this was an arm wrestle, is that the bears are just winning slightly. They're here. Doesn't mean the bulls have given up. We've not capitulated. It's not just, oh, destruction. No, we've shown by going from 76 and bouncing back a little bit here that we've shown some strength. Doesn't mean we've taken the trend. No, this is just the bears cooling off, right? It's just us having a moment here as bulls. The bears still own the trend and the bias is they want to do this. But the bulls are going to want to move to the upside, okay? Hopefully that makes sense. Now, if we jump on over to the liquidation charts, you will see that over the last 4 or 5 days here, just these candlesticks above my head, the volume of liquidation has kind of settled down, which is good because these were some crazy periods here. I mean, these were crazy days of, $500 million, $1 billion, 12-hour candles on the liquidation. So these were not fun days in terms of liquidity, in terms of liquidations, but it has settled down. That being said, market makers are always looking for where is the next bunch of liquidity which they can grab. And if you look at the chart right now, in my mind, when I interpret this chart, the easy liquidity is starting to assemble above, right? The shorts are getting so greedy now to short the price to the downside. It's becoming such an obvious trade to try and push Bitcoin down to 73, 74 because everybody's talking about the end of the bull market, etc., etc. Trump is doing whatever he's doing. That the liquidity, the juicy bit, I mean, if I tip up my candlestick here, 5 billion of liquidation sitting up here, above here at 100,000 is starting to pile up, okay? So don't be surprised to see market makers want to maybe start having a move to the upside. That being said, remember, market makers don't care either way. They will happily wick down here to 75, take some liquidity there, then shoot up quickly up towards 100,000, take the liquidity there. That is why in this type of market, and you guys who've been following me for a while will know my stance on this, I keep it really simple, guys. When there's volatility like this in the market, there's no leverage, there's no margin, there's nothing. I'm buying spot. If I like the price on Bitcoin, if I like the price on my favorite altcoins, I'm buying a little bit more. I don't care, if I buy Bitcoin here at 83,000, I couldn't care less if it drops to 71, 72, I'm going to nibble some more. So I'm buying at price points which I like from a value perspective, and I'm buying spot, so I can't be shaken out. Right? The only people who are getting wrecked right now are those taking leverage or those panic selling from buying at the peaks of 110,000 on Bitcoin, and same for their altcoins as well. If they're buying their altcoins at this period, then of course they're going to get wrecked. So those being patient, those looking for positions of strength, they're doing okay in this market. They're not doing amazing, they're not enjoying it, but they're doing just fine. They can look at their portfolio, they can walk away, go touch some grass, and they feel good because they're either buying the dip or they're holding, and that's all they're doing in this market. Now, when I notch this down to now the weekly chart, something interesting happens. You can see that the weekly EMA ribbon now starts to climb, right? It's taken a long time for this pullback to come into here by the bears, and now the bottom of the EMA ribbon sits at 75.5. So if we come down to test that level, remember I was saying we need to test this yellow line around 72 to 74 at the previous all-time high, between those two lines there. Well, the EMA ribbon now goes above that level. So the EMA ribbon has started to climbing above this level. So that now suggests that the bulls could start building some strength here. Now, it's still too early. We had a crazy wicking candle here. You see that weekly candle there last week? That's indecision on both sides. It's got a big wick to the upside and it's got a big wick to the downside, which means bears tried to push the price up to the upside, they failed. Bears tried to push the price to the downside, they failed, and there was a stalemate in the middle. But it was a green candle. It was a slight green candle for the bulls, and they won the week by whatever it was, 2%, 2.3%. And more importantly, this week is in the green as well, albeit by only 1.68%. Still a long way to go, right? We've got 6 days left of this weekly candle. But if we can close this week green, that's a good look. That's a really good look, because you moved to the downside, you had this crazy wicking candle here, you had another horrible candle here with the fears around Donald Trump, then you have your reversal candle, and then if we can follow up with a nice green candle here, that could show some strength. What we don't want to do is show weakness to the back end of this week around the FOMC meeting, and then Thursday and Friday following that as well. We don't want to end this candle in the red. I mean, we really want to keep it green. I mean, the more green we can go, the better, just to show that we're responsive here as bulls. We want to bounce from this EMA ribbon. Now, once we bounce, things don't get easier from there. No, we gotta start creating higher highs, right? We gotta start getting structure back in this chart, and that's gonna mean for Bitcoin starting to, mount an attack back at previous all-time high of 109, which is not easy, right? If you take a look at where we're at now, to get back to those all-time highs, you're looking at a 30% move. That's not going to be easy on Bitcoin. It's a big asset class. It takes a lot of money to move it, and that's something that we'll have to see come into play. But let's take it step by step. Let's get this green candle and start building up. The other thing I did want to point out to you as well is the dollar index, right? Dollar index had a few red candles here to the downside, which is really, really good. Again, you want to see this have a meaningful downside move. That's going to be good generally for markets and generally for crypto. Now, you can see this low here is at 100. You want a lower low, right? You want it to do something like this and downtrend to the downside. That's what you ultimately want here on dollar index, is for it to downtrend. Because if you look at this is technically sideways, right? This is not a downtrend like this and like this. Every time on the weekly chart, we've had a serious downward rejection here on dollar index. Risk has rotated on, and you end up in a bull market, not just in crypto, but in stocks, in luxury watches, in real estate, and you have a good boom cycle as well. So ultimately, that's what we're waiting for here on crypto. There you have it, guys. There's an update on the market. If you appreciate these types of updates, smash up the likes. Do not forget to subscribe. If you actively want to trade altcoins with me, you can do so in my Telegram community, ijazcrypto.com/TD. Check it out. Link is in the description. Thanks for watching, and I'll see you in the next one.